Welcome to Greystone Capital Group, where we invite you to embark on an extraordinary journey towards a life of abundance and fulfillment. At Greystone Capital Group, we specialize in the transformative power of passive investing in commercial real estate. Your journey to financial freedom and a fulfilled life begins right here. Subscribe now and let Greystone Capital Group be your guide to shaping a brighter tomorrow.
Who's my mentor, and I would like to happy you come on the show, and I appreciate coming spending the time with me today.
Yeah, absolutely, man. Excited to be on here. We're gonna knock it out of the park. Let's do it.
Great. So tell the audience a little about your background, and today's focus more about how you raise capital, what your strategies, so you can share with everyone.
Yeah, absolutely. So my background, I was a high school industrial tech teacher. So I was teaching like wood tech, metal, the shop class, right?
Yeah.
So I did that for several years and got bored of it pretty quickly. I was doing remodeling construction in the summers through college. And then even after college, as a teacher, you have the summers off. So I'm doing remodeling construction and I always loved real estate. So as I was reading books and getting into it, this is about 2006, 2007, watching the market run up and then watching it crash. And in 2008, I jumped in and started buying my properties. I didn't know that I shouldn't be buying it. Everybody told me later that I was crazy and I was stupid and I shouldn't be buying properties at that point in time. But I didn't listen to them, and I'm very glad I didn't listen to them because I was buying properties for pennies on the dollar and buying properties, that sold for $250,000. I'm buying them for $40,000. And I started buying single family homes, duplexes, triplexes, smaller stuff like that. I flipped a lot of properties, flipped over, between the flips and the rentals and all that kind of stuff, flipped over 150 properties.
Yeah.
It built up a pretty good rental portfolio too. For every about three, and this wasn't a science or anything, but for every about three properties I ended up flipping, I would keep one as a rental and just continue to grow my portfolio. So at one point in time, I had, over 100 of those types of properties. And then in 2015, I transitioned from doing these flips and small rentals to apartment buildings.
Yeah.
And just really honestly, it was that transition of looking at my cash flow, looking at what was going on. And I said, man, these rentals make so much sense. So how do I scale that? How do I make that a big part of my business and get bigger and better and build a stronger company? The flipping didn't make sense. It was just going to be too much work. You can't scale it. I mean, you can, but to an extent, right? And by the way, when I'm looking at the returns, I'm like, these rentals make way much more sense, right? I'm getting good distributions and I'm building up equity. So let's go that route. So I started buying, 10, 20 unit homes or 10, 20 unit apartment buildings and scaled up to, where we're at right now, buying 100, 200 unit apartment buildings and in kind of the Midwest mainly.
Yeah. Okay. Great. Yeah, I know you guys in Minnesota and you're doing good. Awesome. And let me ask you, Todd, what was your, I guess, strategy? How did you start raising money and what do you do to raise capital?
Yeah. So actually I started raising money right away, right? When I was flipping houses, I didn't have any money. I was a teacher. So I started raising capital right away from private equity, and I would give them pretty good returns on their investment. I started out doing a split, realized I was giving away a crazy amount of money. So then switched that over to just giving like a 15% return, which, the flip would take about 6 months. So they're really getting about a 30% annualized return on their investment. So still a really good return, right? And then when I transitioned to apartments, what I did is I went to everybody that invested with me on the flips, and I said, hey, this is what I'm doing. I showed them kind of how things are going to be and said, would you be interested in these apartment buildings? And everybody's like, yeah, I'd be interested. So that was a nice kind of transition to take those investors and convert them over to apartment investors. But of course, it wasn't enough to really continue to scale and grow. So I had to build up my database really quickly. And so how I built my main database, besides those people, of course, it's referrals. So continuing to ask people that have done business with me for referrals, and then getting myself out there publicly. Before Jonathan, I never did anything. Like, people would ask me what I do for a living, and I'd say, well, I'm a real estate investor. And they would go, oh, you're a realtor? And, oh man, how's the market doing? I'm like, yeah, I guess I'm a realtor. I just didn't want to like tell people what I did, because I don't know. I just thought I didn't want to be bragging about what I was doing. I was doing a lot of deals. So I didn't want to I was making good money. So I didn't, but I didn't, it was doing myself a disservice. And quite frankly, a lot of people disservice, because now the way I think about it is, when I tell people what I do, people can either go, okay, that's cool, or that's stupid. It doesn't matter to me. Or they can go, tell me more. I'm really interested in what you're doing. And I can positively affect people potentially, right? If I don't tell anybody, I can't make any difference, right? I can't help anybody out. I can't get somebody to change their mindset. But if I do tell people, there's a lot of different things that can happen, right? And of course, many times nothing happens. It's just a conversation, and that's okay. But sometimes it leads to more, and it leads to a passive investor that's excited about what I do. And they're like, wow, I've been looking for something like that. I would love to take a look at your deals. Is that okay? Yeah, of course. Then we have a deeper conversation about that. Or it's like, hey, I really want to do that myself. Like, do you know anybody that teaches that? Or, yeah, I teach it myself, and I know other people that do as well. Or it's hey, I'm a business owner, or I want to be a business owner, so there's a lot of different ways the conversation can go, and that's amazing. And it's great. And I love helping people out. But if I don't tell anybody about it, I'm not making an impact. So that was kind of the change in mindset, is that I'm going to tell people what I do. I'm not going to be shy about it. And so I started going on to podcasts. I started my own podcast. I started going to conferences. I started my own conference. I started going to meetups, started my own meetup. So it was just getting myself out there, putting myself in front of people, and telling them what I do. And that really started that snowball of gaining more investors and be able to raise more money for deals. The other thing is, when you do your first deal and you talk about that first deal, you don't have to brag about it, just talk about it. Put it on social media, talk about it on your podcast or other people's podcasts. When you start to talk about that deal, you raised capital for that first deal, you're putting it out to your on a newsletter to your current investors and to other potential investors. That raises a lot of interest. Your first deal is going to be the hardest. Your second deal is going to get a lot easier. Your third deal, and it just continues to get easier as you raise capital, as long as you put it out there of what you're doing and the success that you're having along the way. So I think that's really important.
I like that, because I agree that you create your own meetup, create a podcast. So that's great. That's how you build your own brand and ecosystem. So I'm doing now, creating my first meetup and creating a brand. So we grow and talk about what we do, and always network in the industry is what I've been doing. So I've been out two events already, last 2 weeks in 2 events, reconnecting with some people I've been in the industry for 4 or 5 years, and some people I connected. So it's great. That's great. Awesome. And I know you are a multifamily value add syndicator, and you have also a retail, which is very interesting. You have a triple net retail in Minnesota, is that right?
Yeah. So yeah, we got a couple different things. So our bread and butter is multifamily, and I think it probably always will be. We love the market. We love the demographics, what's going on there. So right now, that's our bread and butter. I don't see that changing, but we also like to diversify. And so we consider ourselves value add investors. We're not necessarily married to just multifamily. It's got to have a value add. And by value add, it's construction, it's renovation value add, where we can renovate, make it updated, and then, raise rents and occupancy, right? So this retail was a retail strip center it's in the second busiest intersection in the state of Minnesota. It's a great location, and it just hadn't been updated for years and years. And so it was just completely outdated. The landlord that owned it was just a terrible owner. Hadn't raised rents. Was not just wasn't even good to the tenants that were there.
Oh,
And so
okay.
we knew that, like, look, there's just some low hanging fruit here. And so we were able to raise rents by providing goods. And quite frankly, the tenants, I mean, nobody wants to see their rent go up, but they were happy because we were providing excellent service to them.
Okay.
So they were getting their needs met. They were seeing improvements to the property. When they said, hey, we've had this complaint about XYZ, we're like, oh, okay, well, we're going to solve that for you. So it was finding that value, the deep value add, and buying this retail strip center. It's about 1,000 square feet. And yeah, it's doing excellent. And we
Excellent.
partnered with good people that know retail. So it's
Mm-hmm.
not just us going in blindly. I think that's really important. If you're sitting here trying to get into an asset class you don't know as much about, well, find other people that you can partner with that know a lot about it and can
Mm-hmm.
help you be successful. So that was, I think, a definite big key is just getting with the right group. We did that same thing with an industrial slash office building
Mm-hmm.
that we've got that's been very successful as well. And then we own some assisted living. And honestly, with the assisted living, we didn't do that and have struggled with the assisted living. And I think because we didn't partner, now this isn't Endurus, this is a different company, but um, we bought some assisted living, and it would have been much better to partner with a great operator than to
Mm-hmm.
try to go at it alone. And things are going much better, but it was a really rocky start to that venture. So
Mm-hmm. Yeah, I guess if it's not your niche, you don't know anything about it. Don't venture in yourself, because when you find out assisted living has a lot of so many rules,
yeah,
so many complications that you weren't aware of that can that can hurt you.
yep,
And it's much more.
absolutely.
Yeah.
Look, we found great opportunities, and you say, oh, I want to get into that great opportunity. But if you don't know enough about it, you either got to say, I don't want to do this. We can't do this because we don't know
Yeah.
enough about it. Or you got to say, who do I know that is excellent at this
Yes.
that I could either
Yes.
partner with, or maybe I can just arbitrage it, right?
Right.
And so figure that out and don't just go at it yourself. So that's probably a big mistake that I made, is thinking, wow, this is a great deal. I'm going to do it myself. Where I should have said, hey, this is a great deal. Who do I know that wants to be a part of this deal?
Yes. Yes. That's very important to my audience. So don't go along if you don't have any expertise, because otherwise you may fail at that venture, right? So
Yeah.
that's a big lesson.
Well, Jonathan, you talk about raising money, right? So
Yeah.
we're syndicating apartment buildings, or self-storage, or
Mm-hmm.
retail, or whatever you're syndicating, right? And if
Correct.
if you're an expert GP, that's great. If you have experience, that's great. You're going to be successful at it, or at least have a higher chance of being successful at it. But if you're like a lot of people that are just beginning, you get excited, it's that shiny object syndrome, and you're like, hey, look at these numbers, they're fantastic, I'm going to
Mm-hmm.
buy that building myself. Why would I invest with a syndicator? Because they're taking a big portion of the return. Like, that doesn't seem fair. Look at this deal, it's great, I'm going to do it. And I got a property management company. they don't You don't realize how much work actually goes into it. You don't realize what it takes to go into it. There's just so many traps and tricks that you can get stuck in, that makes that on paper look excellent, so sexy, beautiful. And then when it comes down to it, holy cow, you can lose everything pretty quickly. And by the way, even a successful GP can lose things because there's a lot of traps that are out there.
Right. It's always moving parts, and something that no one predicted with the bridge loan. The interest rate went up 11 times in
Yep.
18 months. That's another black swan that
Yep.
even good operators would not foresee this black swan event,
Yep.
because no one in the world would think 18 times, 11 times in 18 months. That just sounds
All
too, you know.
all the financial models predicted interest rates going up, but none of them even came close to where they went, right? If
Yeah.
you would have, if you would have hedged yourself on the most aggressive models, right? The most aggressive interest rate spikes,
Yeah.
you still would have been way off, and you still would have definitely undershot where the interest rates went.
Yes. Yes,
So
that's true. So that's why, yeah, that's why it's not like set in stone. You gotta see how it goes and see how you gotta catch out, weather the storm, basically. So
yeah, yeah,
okay. Okay, great.
yeah.
So
I
it's
go ahead.
yeah, so what I guess what if someone is new or listening, what do you recommend as a tip? What's your best advice to someone?
So, are you talking somebody who wants to actively invest, passively invest, or maybe both?
Maybe someone wants to raise capital and become a good capital raiser.
Got it.
So what do you recommend?
Yeah. Look, so if you want to become a good capital raiser, you need to build your network. And so here's what I would suggest you do. And you take everybody that you know, every single person you know, and you write them down, put them on a list.
Okay.
And it could just be a former boss. It could be a former employee. It doesn't matter who it is. Everybody that you know, put them down on a list, and then start to look at that list. Don't put Aunt Betty that can't rub two nickels together to pay their rent. Like,
Mm,
you can leave them off the list, right?
yeah.
But anybody who you think has even a slightest chance of investing in your type of deal,
Yes.
put them on that list. By the way, I've got a great investor who drives a rusty minivan, lives in a very modest house. You would never expect that they would have enough money to invest, and they invest in a lot of our deals.
Wow.
So don't discount people unless you know for sure there's zero chance, right? So take that, create that list. That's your first start of your email list. And then your job is to continue to grow that. Send out a monthly newsletter. Just educate them.
Hmm.
People need to know that you are raising capital. They need to understand that you are an expert or partnering with experts, right?
Okay.
So
Okay.
they need to understand that. They need to know about this because it
Yeah.
might be new to a lot of people. Most people don't have a clue what multifamily syndication is, what, any value add commercial real estate syndication. They just don't know what it is, right?
Yes.
So educate them, educate. And then your next job is to grow your list. I've already talked about different ways to do that. There's a lot of different ways to do that, but you got to get out there. You got to network. You got to get in front of people. It's just, there's no other way. Face to face, it's amazing how much better conversion face to face is. But even Zoom and phone calls are fine as well.
Hmm.
Um, the other thing is never ask for money.
Okay.
Okay. I think too many people ask for money. They're desperate for the money
Yeah.
and they get nothing because of it. You're providing people an opportunity. And that's the thing that I had to change my mindset when I didn't
Okay.
want to talk about what I did to now being able to talk about what I did. Is what I think about it is, look, if I have a person that I know that doesn't know what I do, and they find out in 5 years what I
Hmm.
do,
Right.
and they say, "Hey man, why didn't you tell me what you do?" I was talking to our mutual buddy Jim, and he's invested in 12 of your deals, and he's crushed it over the last 5 years. He's doubled his money. Like, why'd you leave me out? Right? He's
Oh,
pissed
wow.
because he's like,
Wow.
"Hey, what's going on here? Why didn't you tell
Oh,
me about this?" So tell people about it. Um, you're providing them an opportunity to invest in a safe, secure investment backed by real estate. Now it's still got
okay.
risk. So of course, make sure you disclose that there's risks, and it's not
Right.
that's guaranteed, but
Right.
they need to know that and be aware of it. But again, you can't ask. If they say no or they're just not interested, that's fine. No big deal.
Okay.
Like, and then ask for referrals. I always be asking for referrals. And right away, it's tough to ask for referrals because you don't have a lot of experience, but
Yeah.
ask for referrals. Always be trying to continue to grow
Hmm.
that list.
Right. That's a good tip because ask for referrals. I see my friends putting ask for referrals in the newsletters. I might start doing that too. Ask for referrals. Yeah.
Yep.
Okay, that's good. Well, good, Todd. Thank you. Thank you. And how people want to reach out to you to want to look at your next investment?
Yeah, absolutely. So our website is enduruscapital.com, ENDURUS capital.com. My email is Todd at enduruscapital.com. I also have a podcast. You're going to be on it here shortly.
Sure.
It's Pillars of Wealth Creation. So you can check that out as well and kind of learn more about what we're doing and after you listen to this, check it out too.
Well, thank you. Thank you so much. I appreciate your time.
Yeah, absolutely.